Hello, everyone. I hope everybody is well as we head into the final stretch of 2025. There's a lot of things that are top of mind right now. We have interest rate policy, we have economic data surrounding jobs. And so what I thought I would do is I'd just chat a little bit about what are some of the leading indicators for investors. And, there was this study I came across recently. And when we look at what's top of mind for high net worth individuals, absolute returns is one of the items that are on this list. But surprisingly, there's two in the top four that actually address risk. So number 2 is wealth preservation, and the second one was risk management. And so I think where we are in the market cycle right now, we all want to see our statements go up, me included. But in the same sense, we also want to protect what we've actually earned over the last number of years. So wealth preservation and risk management is critical. And the challenge right now, when we look at a lot of Canadian investors, they subscribe to the typical, stocks and bond type of allocation. So if you're a balanced investor, which is probably the most popular mandate in Canada, you probably have 60 to 70% of your investments in stocks and 30 to 40% of your investments in fixed income. And if they're not owned in individual stocks and individual fixed income, you generally are invested in those via proxies, such as exchange-traded funds, pooled funds like mutual funds or segregated funds or what have you. So what we've done for a lot of our families is we've actually diversified away from 1 to 2 asset classes, and we've introduced them to 5 to 6. So beyond the traditional stocks and bonds, they also have access to private real estate, private infrastructure, private credit, private equity. And when you look at where a lot of the smart money is, so you look at a lot of the big pension plans like the CPP, they allocate roughly 2/3 of what they manage in these alternative investments because they're looking at trying to preserve wealth for the CPP plan because they have a lot of Canadians that are drawing on it. So if it's good for the smart money, if it's good for the institutional money managers, why isn't it smart for you? Ask yourself that question. Wherever you're at today, do you have access to asset classes besides 1 to 2 asset classes? And if the answer is no, then you should start asking questions or reach out to individuals like myself and get educated on it. So if you're in this situation, give me a call, drop me an email, or message me. I'm happy to sit down with you for 10, 15, 20 minutes, give you a quick assessment, and I can point you in the right direction of what are the things or the items that you should be considering. I look forward to chatting. Have a great day.